to this. Happy Friday, everybody. So this week I wanted to discuss social media influencer pitfalls. So the last video I did was pitfalls for short-term rentals. So this week I wanted to do influencer pitfalls. Basically, these are the two hot topics on social media on the way to save on taxes, and they are starting to get the attention of the IRS. And so wanted to kind of talk about some of the things to watch for as a social media influencer. So what it comes down to is ultimately there's no new regulations or anything about being a social media influencer that we specifically need to watch for. However, what it really comes back to is the definition between being an actual for-profit business versus a hobby. And the reason why that's such a big distinction is because hobbies ultimately, your income, your revenue is taxed at full amounts as other income. However, hobby expenses are severely limited. And so you might actually get taxed on revenue and not necessarily get to write off the expenses against it first. So we want to make sure that we are classified as a business. Now, the definition to be a business is have profit motive. Now, some of the different agencies out there, government agencies, have different ways of defining that. But ultimately, what it comes back to is if you are operating like a business, then typically that shows that you have profit motive. So there's a few things that the IRS likes to see. One, you have a state registration, so like your LLC or be incorporated. You separate finances. So you open a separate business bank account and separate your personal expenses from your business expenses and keep appropriate accounting records. You may or may not need to get general business liability insurance depending on the type of niche that you're in. But those are typically things that traditional businesses do, so it would help your defense to do those same things. Now, why is it such a big deal to make sure that we can write off these expenses? Because a lot of times in social media influencing, we're writing off things that most people would consider entertainment or expenses of the typical ordinary life, which tend to not be business expenses. For example, let's say you're a social media influencer, and this was an actual example used in some continuing ed I recently went to that came through a publication from the IRS. So if you're a social media influencer and you're following and making money through your channels by going to concerts and you're basically reviewing concerts, then your tickets to get into those concerts are a business expense. While the typical person attending the concert, it's entertainment, would not be allowed to write off their tickets to any venue. So we want to make sure that we're turning it into a business so that we can make sure we can write off those types of expenses. Things that can become very tricky with social media influencers is writing off hair, makeup, clothing, anything like that. That can become a pitfall to watch for. So, excuse me, we got to make sure that makeup and clothing that you typically wear in everyday life is not allowed to be deductible, not for any purposes. So the clothing rule basically comes from the idea that if you're an officer, a police officer, or a firefighter, or a military soldier, then you're not allowed to wear your uniform in off-duty hours. Therefore, if you're required to buy your uniform outside of work, it's not refunded or whatever, reimbursed, then that would be a tax deductible expense. Whereas, say, like an attorney or a CPA or whatever, where I have to wear a suit and a tie to work every day, it's a requirement for work to be dressed in business professional. Uh, that suit I can wear in everyday life, regardless of um, what I'm required to wear to work. That would not be considered a business expense or tax deductible. Well, if I'm in the advertising industry or I'm wearing something specific to advertise my name or I'm doing something to promote my brand, that's a business expense. So if I'm buying certain clothes to wear for a certain video shoot, then that would be a business expense. For example, an outfit or a costume for the production of a movie. That's a business expense. Well, if I happen to be doing video production every day, then we start to get into this fuzzy area. So we have to be able to say, hey, look, this is not the type of clothing I would wear in everyday life. So you might have to document, uh, what would you wear to Walmart? That might be a way to get around it. But it's still possible to write off your clothing, write off your makeup and your hair. Uh, but you have to do it in such a way that it shows that I'm doing this for the business. The same thing goes with makeup. If it's makeup that you would wear in everyday life, it's not deductible. Whereas if it is special makeup specifically for video production, that is a business expense. Again, where's the line on that? It gets kind of fuzzy. Uh, so if you're doing extra types of makeup in order to produce your videos that you're going to post on social media, that makeup would be deductible. If it's not the type of makeup that you actually wear in everyday life, then it's not technically deductible. So again, you might have to document, well, what would I look like if I go to Walmart? Um, so these are some of the things you have to watch out for. Now, uh, as a social media influencer and through some tax advice and good tax planning, it's possible to write off a large chunk of your life. If you're constantly posting every day and you're trying to monetize or you have monetized your channels, um, and everything you do is to promote that channel and to increase your revenue, then there is an argument there that everything you do that ends up on the social media channel is a business expense. But you really need to work with your tax advisor to understand what is deductible and what isn't, and if it's in the gray area, how are we making it more legitimate as a business expense? So there's been a lot of push to say, hey, go become a social media influencer and make your life tax deductible. But you have to look at thresholds and risk as well. If you're only making a couple $100 a year as you're trying to get started, you don't want to show a $10,000 loss on your tax return unless maybe it's the year you bought $10,000 of video production equipment. The other thing that's going to make you look more legitimate is I bought $10,000 worth of video production equipment, a high-end grade camera, sound system, that type of stuff. That's going to make me look a little more legit than if I'm just using my cell phone. Cell phones work great in a pinch and maybe as you're trying to get started, but if that's your entire video production equipment, it's going to make it less legitimizing in the event of being challenged by the IRS. But if you're just getting started, yeah, we don't want to show a $10,000 loss if you're only making a couple $100 a year in revenue. We want to keep it more reasonable so that it doesn't throw up a huge red flag. I'm not saying that maybe you can legitimately claim $10,000 of expenses. However, again, that should be a conversation you have with your tax advisor. There's just I'm not so I want to be clear here. Like there are great ways to write off expenses and create some good losses using social media influencing. But you do need to be careful of some of the pitfalls and the nuances in place and make sure that you understand the tax codes and laws behind it so that you cross your T's and you dot your I's. If you're going to be aggressive, you have to make sure you be aggressive in a conservative way, I guess would be a great way to put it, by making sure that you're having proper documentation, you're keeping accurate records, and you have a good argument of why something is an ordinary and necessary business expense for your for-profit business. Otherwise, you're going to be classified as a hobby, and that couple $100 will be considered taxable income, and you get no losses. But that change is going to come 3 years down the road when you're getting audited. And so then they're going to tack on interest and penalties on that too. And if you had reported a $10,000 loss that got you a nice big refund, now you're going to owe that money back, the taxes back on that $10,000, and it's going to come with interest and penalties. So make sure that you address if you're trying to turn your social media venture into a business and make it tax deductible. Make sure you have a good, open, and honest conversation with your tax advisor before you go down the road of how aggressive you want to be. Um, Not saying it's not possible, just saying you got to cross your T's and dot your I's if you're going to be aggressive and understand the rules behind it. Anyway, hopefully this helps, and have a wonderful weekend.